Hello and welcome to another D-Valley video. Today we're going to take an in-depth look at Carnival Corporation, ticker symbol CCL. We'll dive into the financial metrics, assess the company's growth, and ultimately try to find its fair buy price. Carnival Corporation and PLC is a British and American cruise operator with a combined fleet of over 90 vessels across 9 cruise line brands. As of the 30th of September 2024, its stock price is $18.5 with a market cap of 23.2 billion. Now let's dive into some key valuation metrics. The price to earnings ratio stands at 15.3. The price to cash flow ratio is 3.58. Over the past 5 years, the company's revenue has grown by 3.7%. Its bottom line has decreased by 2.5%. In terms of earnings per share, there has been a decline of 101.4%. And notably, the number of common shares outstanding is 1.26 billion, a 82.6% dilution over the same time. Now let's assess the company's liquidity and solvency. The interest coverage ratio is 1.49, indicating the company's weakness in its ability to handle debt obligations. The quick ratio, a measure of the company's short liquidity, is 0.24. This suggests that they're not in a position to handle short-term shocks. Additionally, the long-term debt equity ratio is 3.98 and the total debt equity ratio is 4.3, both indicating a very high debt load. Shifting to the cash flow statement, cash from operations stands at 4.3 billion, reflecting a decrease of 21.8%. Cash from investing activities is 2.8 billion with a minus 46.7%, while financing activities are at minus 5.1 billion, showing a 676.9% of the same period. CapEx has decreased by 45.5%, and free cash flow has grown by 216.2% to 1.2 billion. Moving forward, let's look at the return metrics to see how well the company is utilizing its resources. The return on equity is 13.2%. The return on investment is 8.1%. The return on assets is 1.8%. And most importantly, the ROIC, return on invested capital, stands at 5.2%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 12% for 10 years, and a perpetuity growth rate of 2%, we get a fair value of $17.69. Secondly, using a multiples valuation of 20 times forward price to earnings, 20 times sterling 12 months free cash flow, and 25 times sterling 12 months free cash flow, we get a fair value of $33.03. Fully, the analyst price target is $22.29, and putting it all together, we get an intrinsic value of $34.34. Using a 50% margin of safety, we arrive at an acceptable buy price of $20.69, suggesting that the stock at the current levels is undervalued. To wrap up my analysis, I rate Carnival Corporation as a whole. Personally, I feel that although their cash flow operations shows a big improvement in their financial efficiency after COVID, they're also heavily indebted and their balance sheet looks a bit too unbalanced and unstable for me. Also, I believe that their return on invested capital is pretty low, showing that they're not really able to generate much return on their invested capital, on their capital. Well, we can also see that their not only is their debt very bad, but their debt to equity ratio, debt to equity ratio is pretty much near what I would consider dangerous levels. I mean, their interest coverage ratio is already 1.49, which is not really that good. It's basically very close to not being able to actually pay their debts. And so I believe that although their cash from operations show a big improvement, as I've already said, if you actually take a closer look at their ability to handle their debt, which they managed to incur during COVID, they actually have a very, very bad situation on their hands. Of course, management could turn the situation around. Before COVID, they were very well uh, run company. They had actually not very low, but they had a moderate debt load. If they can get back to pre-COVID uh, balance sheet, then I believe that they would be a buy. But Currently, I feel that the debt is just too big of a problem for me. So to end my analysis, I would give a fair buy price, or yeah, a fair buy price of around 13 $12 $13, because I believe that's where the value opportunity starts to become too big for me to ignore. So thank you for watching. If I was helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.